Hello, everyone. Welcome to ODI. I am Sara Pantuliano, the Chief Executive here at ODI. Welcome to all of you here tonight in London and to our colleagues who are joining us online. This event is part of ODI MDB's Leaders Series. We've been featuring leaders of multilateral development banks that have been sharing their experience, their vision for reform. And we're really honored to have with us today, the inaugural president and the chair of the board of directors of the Asian Infrastructure Investment Bank, the AIIB, as is known, Jin Liqun. The AIIB is actually the new kid on the block in some ways, right? You know, it's the newest multilateral development bank that was established in 2016 in Beijing. It comprises 109 members across 6 continents. President Jin has got a very long-standing career, you know, before taking up the presidency of the AIIB, he was the Secretary General of the Multilateral Interim Secretariat. He served as the chair of the China International Capital Corporation Limited, was China's first joint venture investment bank, the chair of the Supervisory Board of the China Investment Corporation, and the chair of the International Forum of Sovereign Wealth. Well set up to take on this role. But you also served as the vice president and ranking vice president of the Asian Development Bank, and also as the executive director for China at the World Bank and the Global Environment Facility. So President Jin spent nearly 2 decades at the Chinese Ministry of Finance before that, reaching the rank of vice minister. You're approaching the end of your second and last term leading the AIIB in February 2026. And so we're really looking forward to hearing your insights today from the experience of leading the AIIB over the past 8 years. What we've been discussing throughout our MDB Leaders Series is that if MDBs are going to rise to, you know, the multiple and interlocking crises that we face today, they really must grapple with these competing priorities that we see. Obviously, they need to better integrate the climate and development objectives in their strategies, and that, of course, is on, you know, high on the preoccupations of all the leadership of the MDBs. But they also need to be able to reach their potential lending capacity. They need to be able to scale up finance. They need to create, you know, stronger incentives and support for client countries to take up MDB finances. And I think they need to work better, more effectively together as a system. So over the past few years, these issues have really taken center stage in the debates on financing for development, particularly at the G20. We at ODI have really been trying to explore ways to help expand, you know, the lending capacity of the MDBs and to help them work more effectively, more efficiently as institutions, both individually and as a system. Now, the AIIB is undertaking a midterm strategy review right now. So this is really an opportunity to take stock of progress, to understand what you can learn from what you have sort of achieved to date, but also looking at how you're delivering on your commitments to increase private capital investment and, you know, securing climate resilience in Asian infrastructure. That's what we will be discussing with President Jin tonight. And together with President Jin, we have 2 of my colleagues. To my right, Deputy Chief Executive and Managing Director Hans-Peter Langs, and to the left of President Jin is Sarah Kohlenbrander, our Director of the Climate and Sustainability Program at ODI. So we'll hear from President Jin first, and then we'll bring in Hans-Peter and Sarah to offer their own perspective and engage in conversation with President Jin. But let's begin. President Jin, as I was saying, you are reflecting on these past 8 years leading the AIIB. What have been your proudest achievements, and what do you think have been your biggest challenges?
Thank you. Thank you very much. Good afternoon. Nice to have the opportunity to have an exchange of ideas with you. With regard to the question, I would say it's not my achievement. It's the achievement of the management and entire staff. It's also the achievement of the executive director's board and also the cooperation between board and the management. So everybody in our bank is very much proud of achievements we have achieved collectively. All right. as one team. I think this is very much important. Excuse me. Now, first of all, we stick to the basic principle of a multilateral development bank. It was designed to be a multilateral development bank with special features in the 21st century. Some people asked me the question when we were about to be set up. What is the purpose of having a new multilateral development bank? Don't you think it's more cost-effective to put the money in existing institutions rather than creating a brand new bank? I said, actually, to create a new type bank would be more cost-effective. And this is not to disparage any well-established institutions. They were created 7 decades or half a century ago. Situations were different. We are in AI era. We have far more advanced technology. So in my view, we can reduce substantially, I think, the staffing to achieve the same kind of product. Anyway, it's a new development institution. The significance of creating new one is not simply to create more projects, to finance more projects. It is to explore the possibility. First of all, how can we promote broad-based economic social development by working together of all of the MDBs, right? So this is the first important. Secondly, how could we mobilize private sector resources to the extent possible with limited public sector money, taxpayers' money? Third, how could this bank be nimble enough, agile enough to respond to the changed needs of the developing member countries? The bank's name is Asian Infrastructure Investment Bank because it's basically focused on Asia, but we are open to any of the countries in this world because we believe that Asia could not sustain itself by working alone. Asia should have connectivity with the rest of the world. And last but not least, how could a development institution work itself out of the model which depends periodically on general capital increase of the shareholders? How could a development bank grows its own capital based on its innovative approach? So this is something which a lot of people maybe missed out. And I also told a lot of people in European countries, in the United States and Japan, we invited all of these developed countries to join, not to join a bank which is already established with the rules of the games set up. We join you to come and making the bank. So European countries, including the UK, of course, UK is the first to announce its decision to join in the making of the bank. It's not to join the bank. Japanese President Tato Chino told me in the 1960s when Japan decided to set up an AIIB, they said Japanese lobbied all of the European countries, asking them to come. For what? Money. Because they did not have money. And I said, I came more than half a century later. For what? I don't need your money. I need your ideas. I need your support to give credibility to this bank. I need European countries to come and set up a bank with high governance standards. This is what we need. Things have changed. Asian countries have capital. We are not short of capital. What we need is the ideas. How can we work together? So that was the story. And there are a couple of things which we can share with you why this bank is different. At the same time, this bank remains in the gene pool of multilateral development banks. If we don't have the genes of MDBs, we are different creature. When we're different animal, right? So this is the overall picture, and I would like to respond to the question you may have about some specifics. Okay.
So I think some of the specifics would be interested to hear more about is where you think your greatest, innovation, the difference. I mean, we understand the gene pool. We know how MDBs operate, how they're set up. But what do you think are the most interesting, distinctive features that really set you apart?
Nothing we did was really innovative. We simply pick up whatever is the advantages of other institutions. For instance, the special feature, we don't have the resident executive board. Is the great feature for MDBs? Maybe yes, but all of the private sectors have non-resident board. And John Maynard Keynes had a fierce debate with White about non-resident board. I'm sorry to say he lost because the economic power was shifting to the United States. You should understand the resident executive board blurs the division of responsibility between the management and board. Private sector companies, board members are the real owners, except probably independent directors. Real owners know how to play with their money. They don't do it directly. They hire professional experts to manage. You do well, go on. You do it badly, kick out. They never, ever would pay to the professional teams, and then they would do their own job. Or I hire a very expensive chef, and I put him aside, I cook in the kitchen myself. Am I crazy? But why the executive directors on the board of these institutions would like to micromanage? Because it's executive board. Executive board means they are executives. And how about the president or vice presidents? So ever since the Bretton Woods institutions were created, absolutely none of the management team were kicked out because of big mistakes. Why? Because everything was approved by the board. We want to change that. Board should look after policies, strategies, management, implement, execution, right? And if we make bad judgment, we make big mistakes, we cannot blame the board. In the World Bank or in other those institutions, if anything goes wrong, the board say, hey, you did a lousy job, and how about this project? I said, you approve it. You approve it. And I said, how could you recommend a bad project for us to approve? Yes, it's a bad project, bad recommendation, but you approve it. This should be done away with.
I know a few of your fellow presidents will really envy you for that feature.
So okay,
and former.
Former ones too.
This is no innovation. Second, I said, a new development bank should not knock on the door of the shareholders asking for money every 7, 8, or 10 years' time. the bank should grow its own capital. Now, suppose we are the management team of a private company, and you are the shareholders, you give us money. What should we do? We are supposed to give you dividend every year. Do you think it's crazy for me to say, hey, boss, give me more money because we need more money? Instead of giving you back dividend, we come to you for money every couple of years, periodically. It never, ever happens in the private sector. Is this so strange? Yes. Is this weird? Absurd? Yes. But why this has been going on for so long? Because nobody thought about it. It's the public institution, international bureaucracy. I don't want to create an international bureaucracy. That's something new? I don't think so. We just learned this from the private sector, right? So anything we do is not new. We just pick them up.
Yeah, it is new in the context of the gene pool that you were referring to. So I think that there is a lot to learn there. I was mentioning before that obviously you really set out this first corporate strategy for AIIB,
Yes.
and now you're doing this midterm review. What are you hoping it will emerge from the review?
This review, I would say, basically try to test the validity of this corporate strategy. And we still have quite a number of years to go, but to see in the middle of the implementation, if there's any room for improvement, that's certainly fine. But I don't think we need to do some drastic changes about strategy. What is important to look at the implementation of the strategy, because basically two fundamental features of the strategies to provide financing for climate change upwards of 50% by 2025. We achieved that in 2022. And by 2030, at least the 50% of the approvals should be for the private sector development. So these two fundamental features, I think, is good enough for us to do. And then let's see if there's any problem, I mean, in the implementation. Okay, I don't think we need to question the thrust of this corporate strategy. We just want to see whether we are doing very well. Yeah, so that's the way. And even though the bank was set up right off the Paris Agreement, we did think about the importance of financing for climate change. But I would say the awareness of the seriousness, severity of the consequence of climate change was still very much different 10 years ago. So nowadays, more and more people have become aware of the severity of the climate change, and we are suffering from the consequence of climate change almost every year. So I often said, the so-called natural disaster is not natural. In most of the cases, it's a consequence of the human behavior. This kind of natural disaster actually are anthropogenic. And then this corporate strategy highlights the importance of climate change. But we should understand this does not set climate change financing apart from the infrastructure investment. They are interrelated. A very good infrastructure project for tomorrow must be able to contribute to the reduction of emissions of carbon dioxide, should be helping with the transition towards net zero. So when we say more than 50% of the financing for climate, does not mean we have less than 40 or 30% for infrastructure development. That's not true.
Well, let me bring Sarah here. I'm sure she totally agrees with you on the urgency of the climate crisis. But I just want to hear your reflection, Sarah. What gains you think have been made in terms of climate resilient investment in Asia, but also where AIIB and other financiers could play a stronger role?
Thanks so much, Sarah, and thank you so much for your incisive overview of a new MDB, which you have described as not having many new ideas, but sounds pretty innovative to me. So I guess the first thing to highlight is the sort of size of Sarah's question there. When we talk about climate resilient infrastructure, the mandate that you face in terms of the diversity of country experiences and positions, from small island states to fragile and conflict affected countries to booming tiger economies to global powers that are nonetheless still eligible for climate finance. And so it's a broad brief thinking about climate resilient infrastructure in the region. I think the multilateral development banks and the AIIB in particular are really playing a catalytic role for all of the kinds of countries that I just spoke about. And I have recently been in conversations with Samoa and Indonesia, and they have both nodded to the way the MDB reforms and actions are making a difference there. I think looking forward, you've spoken to the urgency and the transformative impact it's going to be in a hotter world, and what that means for our economies and our societies, and the future, the extent of climate change, the extent of nature loss is actually it's an Asian story, with the scale of emissions, the scale of population and economic growth, and also the extraordinary vulnerability of Vietnam and Bangladesh and their deltas, their small island states, and so on. And I think that demands a step change in the ambition of how we think about climate finance. What we've seen from the MDBs over the last few years are two types of commitment. The first one, of course, is that all finance now needs to be aligned with the long-term goals of the Paris Agreement. So nothing can be contradictory to well below 2 degrees or ideally 1.5, and that it all needs to support the global goal and adaptation. And then the second goal on top of that is a commitment to international concessional finance from developed countries to enable climate action in developing countries. And what we're seeing at the moment in a lot of the reporting on climate resilient and low carbon infrastructure is a conflation of those two goals. And that's a real problem for developing countries in terms of their need for both development and for climate, and for those two things to come together. So for example, a railroad investment being reported as 100% for emissions reduction. It's not really the purpose of a railroad, is it? It's a really valuable effect or impact that it's lower carbon than say road freight, but it's not 100% a climate mitigation objective. And the same with roads. A highway is not primarily for adaptation, although it can and should absolutely be climate resilient, and the AIIB is at the front of that. So I'd be really interested to hear from you about the opportunities over the next few years to push the MDBs collectively on thinking through ambition in what it means to be aligned with Paris Agreement on all spending and investment, and to go beyond that and have really catalytic international climate finance, because I think there's agreement and aspirations to make that step change. But it's hard to steer billions of dollars of loans in the short time frames that campaigners often expect.
Hold that for a second, because I do want to hear your reflections on how you can work better as a system, but not just on the climate side. There is a bigger SDG finance gap to try and plug. As I was saying before, there's a number of interconnected crises and challenges that the MDBs are trying to address. To the eye, recently we've been looking at actually how the MDB system is improved, the way it delivers, but what else can you do? Because they're not quite there yet, are they?
No, the system is not there. We've had sort of the chance to be involved as ODI in a succession of reports with the G20, trying to push the envelope. And you're familiar with last year's report for the Indian presidency about tripling the MDBs, the tripling agenda in so many different ways. And all the MDBs, including AIIB, have moved in that direction. AIIB, of course, created recently, has sort of incorporated lots of lessons learned, as you have said, on lessons that are also a part of the guidance that the G20 is now providing. So on efficiency, responsiveness, the climate ambition isn't in fact something that was built in from the start in the AIIB lean and green, I think. But also working as a system, what Sarah is just referring to, because from the start, AIIB has operated in collaboration with other institutions. And even after building up its own capacity more, I think that's still sort of part of the DNA, basically, of the AIIB in a much bigger way than is the case for the other institutions. So you have taken those lessons. Now, if we look at the work that we have done, others have done, there are there's still, in our view, a lot of mileage to be had by reforming. And you know the MDB roadmap that is now hopefully going to be approved by the finance ministers, G20 finance ministers, in 3 weeks in Washington. There is a bigger MDBs chapter in that roadmap, and this is where I think AIIB, with its significant capital base, really has a lot of space to grow, and has also had kind of this fascinating opportunity to help the World Bank to grow. You have provided guarantees to a portfolio of World Bank loans, and that you're able to do that because of the capital strength. But you can also grow yourself, and so this is kind of a question: where is your ambition? There's another chapter or package in this work around the MDB roadmap around better and more effective banks, and a bunch of ideas in there. One, hopefully being picked up by the MDBs, is around creating country platforms for the climate, but also for other development goals. And I think with AIIB having that form of collaboration really wired into its whole being, it could be a very valuable part of that effort. And then there is a focus that we and others have now put on generating project pipeline, building capacity for projects to emerge. And that's important because there's a lot of talk about the finance and about the money that would be available. But if you talk to many of those that work in the MDBs, and I've been there much of my professional life, they will say, well, the problem is not really the insufficiency of our funds. The problem is that we cannot find those bankable projects that we need. So can MDBs contribute in a bigger, more systematic way, not only to financing, but also to creating these projects? Project preparation facilities, and I know AIIB has recently launched a very significant project preparation facility, which is exactly the right way to go. But AIIB has also launched policy tools, which you did not have originally. So you're able to work in a sector in a way that helps to unblock investments by improving, by setting the policies, the regulation in those sectors. And that could be a very powerful way to operate. In the renewable energy sector, for instance, helping to create the regulation, the power purchase agreements, all those things that are needed in order to provide a good investment horizon to the private sector. Now, AIIB will be able to work on that side of the equation and also on the side of the investor, bringing them in with funding and with risk mitigation. So that is something which the G20 process is putting on the table. And it would be very interesting to hear how you see that going forward at the AIIB.
So yes, how can you work better with this ecosystem? And what is your ambition?
I try to respond to both your comments and maybe questions. First of all, infrastructure is the key. Infrastructure paves the path for sustainable development. And a rising tide lifts all the boats. the poverty reduction operations are important. But it seems that poverty reduction can only help people eke out a living without really giving them the means to be able to develop economy and stand on their own feet. That's why we believe infrastructure is important. However, as you were saying, infrastructure projects, which would create, if done well, be conducive to the reduction of emissions. But infrastructure projects will also induce emissions if they don't do well, right? That's why, for instance, Europeans are very much sensitive to Asian countries building new airports and new seaports. My view is growth of the economy in response to the need of the people is creating pressure to change. If we do not have the increasing population, if we do not have increasing number of people lifted out of poverty, probably the demand for fossil fuel will not be such a big problem. So you just go on burning coal. But because of the pressure, we think something must be done about it. How? Only in this process of development could we come up with new ideas, new technologies to deal with that. Humans over the centuries have always developed new technology because of the pressure to change. Any of the economic resources would have to be replaced by some new ones, not because they are depleted, way before they are depleted, because some new materials, could be more effective. So burning logs would be replaced by burning coal, and burning coal be replaced by fossil fuel, and then renewables. It's all because humans want to do better and to deal with the challenge. Even before they were afraid of the climate change, because they simply want to do something better. So my view is we need to respond to the needs of the vast number of people in developing world. At the same time, we should ramp up our efforts to come up with new technology. And this is what the multilateral development banks can do. We enhance people's awareness of the climate change and many other pressures, right? Depletion of natural resources. So this is what we need to do. And then MDB's role, as I said very often, the financial resources they pull together is very much limited. You say, okay, the assets could be $1 trillion. $1 trillion, so what? It's still limited. So we would like to work together as a system to mobilize private sector resources for investment, meaningful investment, which could take the challenge of the present world. So I regard this mission of mobilizing private sector resources, enhance people's awareness of the challenges as something more important than the amount of resources we can provide. Now, our bank, we have a basic principle: the bank should be lean, clean, and green. Right? Clean means anti-corruption. Green means green economy. Green, but lean, and some people misinterpret lean as. My view is being lean does not mean you have to remain small. Being lean means you are more cost effective. You have more output for less input. A 1,000 employees company may not be very lean if there were lots of redundancy, right? And 100,000 institution could be lean because they produce far more than their peers. So this is important for us to achieve efficiency. I said, on the one hand, the board or the shareholders did something very good. Never ever impose any profitability target. Because we do not open our eyes every morning, look at our stock market shares, whether it's going down or up. And we don't have to prepare something to deal with the board. Hey, this is our profit. No, we don't have to do that. Because we focus on development impact. At the same time, it's also a problem. MDBs really don't care about costs. I'm sorry to say that. Don't quote me, I will sue you if you do that. Because it's public money.
You're live, just saying.
Because you see, you asked us about development impact, which is certainly important. But I don't think it's very much meaningful when we talk about development impact without looking at the costs. Right. So this is, I think, what we need to do to be lean and be cost effective. So how should we do that? We should be more innovative. For instance, in our institution, we have both the public sector and public sector working under the same roof. I told the staff, okay, you should be amphibians. You should be able to do both public sector and the private sector. And in some of the institutions say, I'm a public sector guy, or I'm working with the private sector. You should be both. You're good at both the public and private. For me, a railroad is a railroad, an airport is a port, a power plant is a power plant. Nothing different. But if it comes to the private sector, you should take more care of the risks. You'd have some special people to work with you, taking care of the risks. A public sector, sovereign guaranteed loan, people really don't care very much about the so-called risks, right? And then you see white elephants. And then you see some of the projects not really needed, crucially, at that particular time. So when we work together as a team, I think we can take care of both. And also, I don't like the so-called country-focused approach. Country-focused approach is very costly and very inefficient. You have country office in each and every foreign country. Redundancy. Because when you have the country office, people go there, looks like you keep close touch with the clients. And then headquarters people say, hey, well, these guys are all over the world. Who's going to monitor them? Then they recruit people to monitor them. So you see the growth of redundancy. We don't want that. We create hubs, not country office. Country office has another problem. You lock up experts in your office, agricultural experts, road experts, power experts. Do you have projects every year? No. And these people are terribly, terribly underdeployed. I don't think that's a good idea. We have technical people who work country A today, country B tomorrow. As long as there's need, they can just go over there. Hub. We have an Abu Dhabi hub, which looks after the countries. Within 3 or 4 hours flights, they can reach them. It's far more cost effective than the country office. And our experts could respond to any need of any country. Do you think this is innovative? Maybe, but actually, any private sector company works like that. They may have a small office in some of these countries, but the technical people will go there on call when they need that. So we try to be innovative, and this new kid on the block certainly is smart enough to learn from all his big brothers or sisters. But sometimes, even young guys can give you brilliant ideas, right? So we hope we can learn from all of them but also offer brilliant ideas.
I think you've offered a few tonight. I hope they're listening. Well, I want to open up to the audience because we've got just 15, 20 minutes. So there is a roving mic. I'll give the floor to colleagues. Please introduce yourself, say who you are. I'll come to Vince first, and then I'll go around. And I'll take a few and then come back to you. And for the online audience, you can put questions in the chat and I'll read them out.
Vince Cable is my name. My question comes from the fact that 10 years ago, I was involved in the original decision to join your bank at a time when our American friends were saying, no, you must not, right? But we're now 10 years on. The geopolitics is now much worse. How do you navigate the practical problems? For example, entities lists and sanctions affecting procurement, or some of your leading members like India as well as China saying we've got to de-dollarize payments transactions. How do you deal with all that?
Thank you.
Thanks, Vince. Adrian,
Maybe we pick up a couple of questions.
Yes, let me get 3 or 4 because it's quite a few hands.
Thank you, Sarah. Adrian Hewitt, I'm an ODI associate too. I've got a question on multilateral development banking, but I first want to congratulate President Jin personally and nationally, because today's the 75th anniversary of the founding of the People's Republic of China, one of the big members, and that's quite an achievement. I mean, in European terms, it's like having the Habsburgs around. Anyway, my question is that I'm not 100% convinced that the reason why you set up the AIIB was just to be more cost effective, just because it could be more high tech than the other ones. Because later on you said Japan set up the Asian Development Bank and they had the money, they had the idea, so everybody agreed to that. Wasn't it just a 21st century feeling that Japan still controls the ADB, the United States still controls the World Bank, the Europeans still control the fund? I'll let you into secret, they don't. But anyway, it was China's turn. Wasn't there a bit of that?
Thanks. The lady here at the front.
Thank you, President Jin. That was quite interesting. Dana Barsky from Standard Chartered Bank. I actually have 3 questions, so you can feel free to ignore one because that's a lot. Question 1, I think you guys have done a very good job of focusing on capital mobilization. There are many studies out there, I'm sure you've seen, that show that guarantees are actually a more effective instrument than lending. And I guess the question is, I believe that MDBs could take advantage much more of callable capital from their shareholders. And I wonder if you looked at that as an idea of increasing the amount of callable capital, thus increasing your ability to issue guarantees. That's just question number 1. Question number 2, just curious, you talk about growth. I believe you guys have not been an issuer to fuel that growth, such as IBRD has been or ADB. And I was just wondering if you were thought about accessing capital markets. And question number 3, you talk about efficiency, which I thought was quite interesting, the way your hub and spoke model. I was wondering, and because you're on the smaller side, I do think you guys have an advantage where you can actually move more quickly. And I was wondering if you thought about increasing standardization of your products that would allow the private sector to tap them more quickly and really give yourself an advantage there, be it, wind, solar, et cetera. Those are my 3 tough questions.
Thank you.
I'll come to you in the second round.
Yes. I think when the British government decided to join the bank, actually join in the making of the bank, it was really a very good decision, because probably the British government thought Asian countries and emerging market economies, including China, would be playing a bigger role in the future. And why don't let them have a chance to to set up a multilateral institution. Maybe there could be some new ideas coming out of it. And this is actually my feeling that when I talk to a lot of European countries, they thought perhaps after they listened to me, they thought perhaps it's a good idea to try something new in the 21st century. But of course, I know even the British government had a lot of suspicions or questions, misgivings about whether this bank is really going to achieve the purpose it declared. And only after we had the first meeting on safeguards, social, environmental, inviting experts to come, and only by that time, I think the European countries, including particularly Britain, were convinced that this bank would be, at least we were serious in setting up this bank. And in the signing ceremony of the 57 founding members, President Xi came to the signing ceremony, and he said, ever since China opened up, we have benefited from the general support of the World Bank, AIIB, and all of the bilateral support. China has grown up, and the Chinese people are grateful. They will never forget about that. It's time for us to contribute. That's what he said. And this may relate to the question, and China Bank or Japan Bank or an American bank, I would say China, if China decided to initiate the creating of this bank, certainly China has ambitions, wanted to show that as a developing country, we can do something which can meet international standards. You cannot say, we don't have the ego. I'm a Chinese, I certainly have the ego. But why we can always depend on the advanced countries to give us ideas? Could we try something different? And if you say, if I say China has no ambition about its influence, that's a lie. US, Japan, European countries also have ambitions. And I often was asked the question, what is the influence of China? What's the influence of major shareholders, India or something? I said, major shareholders contribute financially to the institution. They have the right to have their influence. But if influence is wrong, people will reject them. I think when you contribute financial resources, that gives you right to contribute to the institution in a way which may give you a bigger voice. But if your voice, if your ideas are better one, you'll be deserted by people. It's not going to be sustained. So my view is I welcome influence of the major shareholders. This time, China contributed $300 million to the special fund. It's influence. And China certainly, what I see, you have to do a good job in providing development projects. Do it well. Otherwise, I'm not going to give you money. And Germany, $16 million. Actually, it's going to be part of their budget in the future. UK, I think 50 million very early, right? Contributed to this special fund. This is the influence. I welcome that kind of influence. And also, when we have the policies, strategies, European directors would have a big role to play. It's good. It's their influence, and the influence helps this bank to live up to the high standards. So I think it's all right. I don't think we have to say, no, this is not our ambition. That's wrong. I want to call a spade, call a cat, what they say. So the issue, when we discuss, and they say, Articles of Agreement said, the president must be an Asian national. One of the chief negotiators said, since your ambition is to create a bank of the 21st century, We believe the president should be elected internationally, should be open to all of the nationals. I said, that's great. I love that. But we are only building a bank of the 21st century, not the 22nd century, okay? If the United States and the European country, Japan will give up their control of those institutions, this bank has no right not to do the same. You are the role model. We follow you, right? So that's my positive.
Very good.
And your question. First of all, private capital mobilization is key. We do not want to put too much pressure on any of these governments to contribute capital to us again and again and again. But we have $2 or $3 trillion moving around the planet every day. What are these private money looking for? They are looking for a landing strip, which they can land safely, but somehow they cannot find many landing spots. So we need to improve the enabling environment for those private capitals to land and invest. And you refer to our recent policy-based public, climate-based policy lending. Why should we do that? We discussed this with the board. It's not just a public budget support, cut a check, give it to you. No, it's focused on climate change, improving the regulatory environment for private sector investment for renewable energy. We often find the enabling environment is a problem. As a private investor, you do a solar power or wind power, but when the project is done, the power grid may refuse, may deny you access to it because you are intermittent, you don't meet their needs, meet their requirements, something. They would do everything possible to make you suffer, even though you are doing something great. So we would like to make sure that the private sector investors for green economy would be treated fairly. And systemically, there would be no obstacles for that purpose. And then I think callable capital issue, frankly speaking, the CAF review has come up with some of the ideas. Some of the callables should be called. Is it a good idea? You can listen to them, but over the last 7 decades, all these MDBs have maintained their AAA rating by working hard on the paid-in capital and taking a very prudent financial management approach. And the whole world has taken it for granted that callable capital is legally a kind of arrangement to make the investors in these MDB's bonds feel comfortable, but they will not call it. So once you have to tap the callable capital, something must be wrong. So how can we deal with that kind of perception problems? I'm not sure. And again, some people talk about hybrid capital, right? Hybrid capital may have another problem. Okay, the investor buy your bonds, AAA rated company, but oh, it's hybrid. They may ask for a little bit more, a couple more in the spreads. And then that would become the new benchmark. And in the future, the funding cost of MDBs would change. So I would strike a note of caution, be prudent. If MDBs really would like to call the callable capital. My view is we prefer not to tap the callable capital. Rather, we should try to find another approach. What is that? I will let you know. Standardization. Probably private sector operations may be very hard to be standardized. Very, very hard. But I think we need to work on the same standard for environmental protection and emission and resettlement. That kind of thing we call the harmonization of MDBs policies. And then let me share with my idea. When we design this bank, there are two things. I literally perused all of the MDB's articles of agreement. I picked something from AIIB. AIIB has the leverage of 2.5. The gearing ratio of the World Bank, all those is 1-to-1. Now, AIIB could have 2.5. Now, if we go up to 2.5, $100 billion capital could be treated as $250 billion. Will the rating companies have questioned about that? Maybe, but we don't have to go all the way to that. We could raise a little bit without capital increase. And if the rating companies look at the quality of the assets, they may be feeling comfortable. You see, I often said, this 1-to-1 gearing ratio is a waste of the resources. 100% capital adequacy. Is that necessary? I don't think so. I don't think so. But people take this for granted. So if we could raise the leverage a little bit, and it's in our agreement, I think we can do that. Another idea I thought about from the very beginning is to convert the retained earnings into paid-in capital. Okay. So suppose after a couple of years, we make $1 billion. $1 billion net profit. Traditionally, they transfer this $1 billion to capital, and you increase capital base by $1 billion. It's a waste of money. We would move $1 billion net income as paid-in capital. What does that mean? It's not $1 billion, $5 billion. Of course, the parliament would have to approve that because 80% callable capital. They have to increase. But 80% callable capital is the contingent liability. It's not the real cash payment. So they approve this conversion. It's the same as approving general capital increase without real cash payment. I think this would work very well. And this method will not lead to restructuring of the voting power. No, it's the same because it's be paid in capital from the net income. What if the parliaments refuse to approve that? I'm not afraid. Okay, you don't agree? Wait until the day you have to approve general capital increase. And then you have to pay real cash. And then this parliamentary will say, hey, they have to retain earnings. Use that money. No worries. I'm not worried. Eventually, they will believe this is the most ingenious way of increasing capital without imposing any financial burdens. Think about those European countries, for instance, with very tight budget. When war is still raging, when the war is still going on, you know when is the end. When your own people are protesting against double, triple election.
I think we can discuss the idea over a drink in a second, but I have a lot of other people who want to ask questions and we are at time. I just want to check if we are okay to go on for another 10 minutes.
I'm fine.
You're fine.
I'm fine. I could You know, I think 15 or 20 minutes worth the money for traveling to London.
Okay, good, perfect. Deal then, because there are a lot of colleagues there, have raised their hands to ask questions. Can we have a mic here? Thank you for your generosity.
Hi, my name is Mark Boland. I'm a senior credit research analyst at Red Intelligence here in London. So Kenya became the latest AIIB member in last month, and just interested in your views on what kind of possibilities this opened. There was a Chinese pledge at the FOCAC to sort of support an East African transport hub. And there's also talk that AIIB would guarantee a Kenyan bond issuance in the Chinese bond markets, of similar to what they did with Egypt last year. And therefore, you know, kind of in the way, I'm interested kind of in the way AIIB is supporting this kind of market development, kind of opening up for another channel of commercial financing when the access to bond markets in the US and English jurisdiction for these countries is becoming more constrained. Thank you.
Thank you. There's a gentleman here and a gentleman there, and then I promise we'll stop you.
Thank you so much. My name is Anil Pokhriyal, and I'm CEO of Nepal's National Disaster Risk Reduction and Management Authority, Government of Nepal. When it comes to climate change, it's mostly the North Pole and the South Pole, so I've talked very much about. But the third pole is completely kind of left apart. The Himalayas, the mountains, China, we all share the third pole. I think it's time for AIIB, the new kid on the block, to really think, especially focus on mountains, especially the third pole, where we've already experiencing a huge amount of glacial melts, GLOF events that's wiped down a lot of infrastructures. One of ADB's investment in Nepal was wiped out by a kind of a GLOF. We also had just recently experienced another GLOF. And this is a common problem that we all mountain countries, especially the third pole, do face. I think this is where AIIB, the new kid, could really kind of lead the light, especially for other MDBs to show the directions how we could do it. Secondly, how could countries like Nepal, smaller countries, not doing much well in terms of economies, really be able to kind of benefit from again, these kind of new setups, new innovative bank, if I may say so.
Thank you. And last
thank you. Nicholas Swan, Swiss Think. If I may pick up the discussion on the capital adequacy for the multilaterals, which is a bit of a focus of mine. I'm very curious, you know, especially given your obvious wish to kind of think outside of the traditional box, and combined with you really don't need financing, you don't need debt, which of course is what most people get a rating for. With all of the other MDBs, you know, up till now, the capital constraints have been entirely a function of the rating agency criteria for multilateral ratings, because of course there's no regulator that imposes any kind of constraint on them, right? So it's just whatever the shareholders say and whatever the rating agencies say, and usually, in my experience, the shareholders just say, well, ask the rating agencies if that's okay. So I'm wondering, in the case of AIIB, do you have kind of other constraints in your mind, or do you feel constrained at all by the rating agency criteria? How much do you care, really, about the impact on the ratings, given your extremely strong financial position? And is that what drives your capital adequacy focus, or do you have other things in mind? Pulling a little bit more of, you know, you mentioned the EIB, but I would like to hear more.
I think I should also answer your question with regard to guarantee. Guarantee could be a very good approach, but if World Bank provided guarantee, but still $1 you put in guarantee is treated as a $1 for a loan. That is the problem. If the guarantee could make the dollar goes a long way, that probably makes a lot of sense. But you see, MIGA has been working on for quite some time, you know, ever since 1987. But private sector people also find coming to MIGA, you have to pay, and the cost would be higher. And if the investor think the enabling environment is very good indeed, and why should we pay extra for that? But so I would say guarantee is a very good idea, but probably we should think about how can we make the banks' capital works, more effectively. But this is an issue also related to your question about the rating company. The AAA rating is considered sacrosanct by all of the MDBs. Even if you're doing very well, you don't mind, the funding cost will be a couple of bips higher. No MDBs would like to do that, to run the risk of being downgraded, unless they really work as a system and telling the rating companies that you need to change the methodology. The methodology you apply to commercial banks, private businesses, does not apply to multilateral development banks. As I said, 100% capital adequacy is really, really ridiculous. You can reduce to 50%, still very safe, right? And rating companies also should look at the quality of the assets, just not the leverage. So I would say it would be hard for us to convince the rating companies, even though we are working on it. You know why? Because the rating companies got their fingers burned in the 1997, 1998, and then they got themselves burned again in 2008, 2009. Some people question their usefulness, right? Because rating companies only tell you when the sun set, the sun has set, and when the sun rises, the sun has risen. Anybody can do that, right? And if anything happens for a company, for a country, you downgrade them by so many notches. Korea, to 1998, Korea's rating was plummeted. And in China, we say somebody fell into the water, you threw a rock on top of him. And then, what could we do? What could they do? The Koreans came to the capital market. They got some of the money at a very high cost, very, very high costs. But how should we do that? And the rating companies also charge you for the rating. For instance, I was in charge of the bond issuance of the Chinese government, and they would charge you, and for each bond issuance, they charge you for the rating. I think there might be some fundamental change in the rating companies themselves, the governance structure, and also the rating methodology. But I'm most concerned about the rating methodology rather than the structure. Okay, you go about your business. I think it's right, but please apply a different kind of methodology to MDBs. Now, this is what I think is important. Now, Kenya. We made it very much clear the bank is inclusive. The bank is open to all of the countries in this world if they want to join this bank. And we believe sub-Saharan Africa is very much important. And Cote d'Ivoire, for instance, joined us. And we built a rural road linking the people in the mountainous areas, help them to ship their agricultural products out. This rural road would help them ship their things out to the Abidjan port and then ship to Vietnam. Cashew, Vietnam is I think the biggest processor of cashew. So we just fill this missing link. Numerous farmers in the mountainous areas got benefit. And this is a typical example of connectivity. So when we proposed this project to the board, and board said, okay, the bank is for connectivity, okay? You build a rural road in the remote mountainous areas. What does that mean? But we show them this is really very good. To provide connectivity to the poor farmers in mountainous areas is very, very important. In my country, in China, you see, this online shopping and online vendor was really big business. A lot of people went back home. They do not want to work in urban areas because they can easily market their fruits or agricultural products through the internet, banking or shopping or vending. So I think this kind of new technology will help a lot of people, but just to give them the broadband, just to give them a satellite coverage and building maybe some of the roads. You don't need expressway going all the way to the mountains. So Kenya thought about that. Kenya came to us, and they saw Cote d'Ivoire was doing something, and want to catch up. I think it's wonderful. 30 years ago, when I went to Kenya and then to Cote d'Ivoire, the shortcut is to fly back to London or Paris. Now we have direct flight linking Kenya, Nairobi, and Abidjan, which is a progress, but still not good enough. So it's a development urge of the government themselves. They would like to come to us. Okay, you may refer to Chinese program Belt Road Project, and some people often ask me, what's the relationship between Belt Road Project and this bank? And I told them, these two initiatives were certainly come from the Chinese government, but Belt Road is international forum or platform for cooperation. You work together, okay? But ours is a multilateral development bank. We have our own governance structure. So do you finance Belt Road Project? I don't fix labors. I don't ask, is it Belt Road or not? We only process projects proposed to us by the client country. We do not pick projects from the Chinese government. Hey, this is what you want us to do. We don't do that. We, by our standards, process project proposed to us by the client government. If they tell us it's a Belt Road project, fine, let's do it by high standards. And if it's not, fine, if it's good, we do it. For instance, Chinese Exim Bank is not short of money. They want to work with us for what? They said, because AIIB has a high reputation. When we work outside, people don't believe us. So let's work together. Enhance the projects financed by Chinese Exim Bank. Because if we are involved, they must meet high standards. Give you another example. We at the World Bank were trying to finance major infrastructure projects in a country, which I prefer not to identify. And World Bank finally pulled out because they find the money is being siphoned off to the private pocket for presidential campaign. So World Bank pulled out. And then they came to us and say, the World Bank pulled out. We need more money from you. And I said, I'm sorry, we are pulled out also. They said, you said you're different. You're a new bank, you should be different. I said, yes, we are different. But on anti-corruption, we are the same. So whatever country, whatever the relation with China, with any country, we treat them as just a client and go by our high standards. And so to answer your question about geopolitical pressure, how do we navigate? It could be very difficult. It could be also not so hard. As long as we stay the course, we adhere to the basic principle of a multilateral development bank, which process all the projects only on economic and financial considerations. And if you do that, it's fine, right?
I think I need to stop you here. I think there was still the odd question that we may address over a drink. I just want to see if in 30 seconds, if Sarah and Peter want to add anything, but then otherwise we need to close.
Who can follow a performance like that?
Yeah, no, just you're leaving an enormous legacy, and it's quite amazing to create such an institution nowadays. I think many people felt, new institutions are a very inefficient way of adding to the financing potential, but you've shown that this is possible. So that's a great thing. And we have a gigantic challenge. We have all referred to it, and that challenge is you've brought us closer to the solution. And one thing that we're going to see at the COP in Baku, that we're going to see in many of the conversations that are coming up, is that how are we going to get these very, very large amounts of financing that are needed to make that transition. And AIIB, the MDBs are a really important part of this. So great job, and scale up.
I want to add the last words. The biggest achievement we have made over the last 9 years is trust. Trust from virtually all of the countries in this world. It's the first multilateral development institution with developing countries as the majority shareholder. And the people at the very beginning really look at it with a lot of suspicion. You know, Jane Austen said, selfishness is something which should be pardoned, because there's no hope for a cure. And I said, suspiciousness is something which must be pardoned because there's no hope for a cure. But we try to overcome this. And I said, trust has to be earned. Trust is not something you can ask the people to give you. So when we got AAA rating, 17 months into operation with no track record at all, and we had a reception to celebrate. And then I said, please keep this in mind. Triple rating is not a PhD degree. You got your PhD degree. From now on, you don't write a single word, write a single paper. It's people still call you doctor something, not triple rating. Trust has to be earned. So you trust us today, but it will fail you tomorrow. It's finished. That's why we remind ourselves every day, stay the course, keep the high standards, adhere to the basic principles. And this, I think, this trust in the multilateral bank with the developing countries, the majority shareholder, is the biggest achievement. And that would enhance North-South cooperation. And I hope European countries, developed countries, would have more trust in the developing countries when they have any initiation.
President Jin, thank you so much. You've been incredibly generous with your time, but above all, so candid in sharing your insights, refreshingly so. And I think we didn't just get, a lot of insights into the AIIB, we also got a lot of wisdom that we can probably use in our lives. I think this is a demonstration that, youth is ignored at their own peril. Young people bring innovation and ideas that we should all learn from. I want to thank your team and my team for helping organize this in the background, and particularly Annalisa Prizzon, our principal research fellow, that has done a lot of work in the background, and of course Hans-Peter and Sarah who joined you on the panel. We will carry on over some refreshments. Sorry for the online audience, you can't join us, so we can continue the conversation. But please join me in thanking very much President Jin for being with us tonight and enriching our insights into the AIIB and the whole system of the MDBs even further. Thank you very much. Thank you.
Thank you.